This is Freedom Investor Radio, and I'm John Pearl. It hit me like a freight train when I realized there was a better way. When I discovered that I could take my future into my own hands. When I realized I could invest my way to freedom. This is what I'm working towards. In each episode of Freedom Investor Radio, we will explore the tactics and strategies used by the top real estate investors and entrepreneurs in the nation. We will learn how you can start investing your way to freedom and take control of your life. Thanks so much for tuning in. What's going on, everybody? Welcome back to another episode of Freedom Investor Radio. I'm your host, John Pearl, and today I am joined by Nic DeAngelo, who is the president of Saint Investment Group. Nic, welcome to the show today, my man.
John, I appreciate it, man. I'm glad we got to get together and do this today.
Absolutely. Likewise. So, Nic, why don't you just go ahead? I'm going to pass it over to you. Tell us what you're doing now and give us, the high-level origin story of how you got there.
Shoot, both those are big, but yeah, what we're doing today. So a little bit about me. Again, Nic DeAngelo, my company, Saint Investment Group. So we are based in the U.S., Southern California specifically. We have team members all over the world in 3 countries. And we produce and offer income funds for real estate. We produce and offer real estate investment income funds. So what that means is people can buy in essentially on a source of income and have a lot of flexibility as to when they get their money back. We typically offer a maximum return of capital of 90 days. So that's very unheard of in the real estate space. And it's 100% real estate backed. So you basically can get a set income. You can get that without being exposed to the stock market. I mean, you've seen the stock market right now. It's kind of a bloodbath, super volatile. Interest rates, I don't think most people understood the impact that would have on equities, right? Which is massive. It's had a massive impact is the conclusion. So we get to do that by day. We work with mostly entrepreneurs and business owners, but really anybody that has that mindset of self-sufficiency, they want to make sure that their income is a little more diversified and have multiple streams. We offer that with real estate backing. So to get there, is basically we wanted to scratch our own itch, right? I'm an entrepreneur by trade. I grew up in a family of immigrants, of Italian immigrants. So there really was no alternative. There was, not a whole lot of working for companies or corporate culture. It was basically you went out and did it, and that's how you paid your bills. So started very early in construction at 12, and then basically branched off from there and have owned businesses and sold businesses and done different things since then. Graduated, I had kind of different jobs in the music industry and things through college, but I was always close to real estate because to me, it was the absolute, there was no greater investment than real estate. I knew very early on, I was lucky enough to be around some family and some mentors, around the age of 15 that I just knew that they were successful. And I just said, what are the special things that make real estate so good? They talked about the tax benefits. They talked about the ongoing income. They talked about appreciation and all these other benefits and these market conditions. And I was blown away. I was 100% sold from an early age, but nobody told me that there was a way to get into real estate early where you could work with other people or partner or raise money. So I just said, well, shoot, I just have to start businesses. I have to make it save enough money to eventually invest in real estate. So that's what I thought. So I've been doing that ever since. In college, I graduated college in the middle of the Great Recession. So even if I wanted to get a job, there were no jobs that were even remotely interested in hiring, a 20-something, like everybody's especially in real estate, right? Real estate was down the drain. So I found an investor I wanted to work with. I pitched him on hiring me. And basically I said, look, I got a deal for you. Okay. We're going to work for free. You don't have, all I want to do is I'll drive you around. I'll file paperwork, whatever. He's like, oh, shoot. Yeah, no, I can't afford you. I'm like, no. You don't understand. I'll work for free. I just want to learn from you. Okay. And he's like, no, you don't understand. Free is too expensive if you don't have anything to bring to the table at this stage. Because He's like, kid, I'm in a crisis. I got all these properties. I'm mid foreclosure with someone. Like, he was holding on for dear life. So that was an important lesson, that free is very expensive for somebody whose time is worth a massive amount of money. So instead, long story short, I created an email marketing campaign, put together a huge list of interested investors and interested buyers so that he could make some money on transactions and investing. I brought that to him, I pitched him, and he finally let me into the company. So that was my early entry into the real estate industry full time. Since then, during that time, it was the Great Recession. So I had to start companies just to pay my bills. So started a large ATM company and parted with that, sold that, and then entered another industry. Ended up at our peak, we were doing about $1 million a month in sales. We had 40-something employees of different part-time, full-time, and then sold those companies, that portfolio companies off. And during what I learned most about being an entrepreneur during that time, and the highs and the lows and all the different things, were that at the end of the day was that you couldn't just rely on one business, and you couldn't just rely on one stream of income. And the earlier that I invested, it actually saved, even though that business was doing $1 million, 7 figures a month, right? That it had highs and lows. And my real estate investments along the way were what carried me over. When I analyzed my income, it was actually the real estate that carried me through the most difficult times. And it allowed me to reach the high peaks of that business, as well as get through the low valleys, because I was fed, my family was fed, and my needs were met. And I didn't have to react and be reactionary and change pricing real quick because I needed the money at that exact moment. I could weather the storm, and that was through real estate. So I am sold on real estate 100%. And we found that the standard model for many funds weren't a good fit for us as investors at the time, for the 5 to 7 to 10 year hold. So we wanted to offer something unique to the market. And the income fund model we found was the best, which was very flexible. It basically doubles the returns of our Wall Street competitors because it's backed in real estate, and people can get their money back in 90 days or less. So we loved that. And so we went all in on that model, and we've been doing that ever since with great success. And it's scratched the itch of what we needed at the time. So it's been great. So all in all, that's kind of a decades-long explanation into a short segment, but that's kind of the story of how we got here today.
Oh, it's fascinating. I love hearing and talking with folks who have taken an alternate path, such as yourself. You didn't just jump right into the W-2 world. You found a way to provide some value to somebody, and you ended up learning and going down that road. So I can imagine, with the amount of businesses you've been involved with and started, there were probably some low points, some pretty big learning experiences throughout that. What would you say your lowest point throughout your journey is, and what was your biggest takeaway that you got from it?
Sure. So I glossed over it a little bit to give the big picture. So let's dive into that, because on one hand, it was by far the darkest moment of my life. On the other hand, there was, I read this book at that time, The Perfect Timing, and the book in a way saved my life. And it's The Obstacle is the Way by Ryan Holiday. And I return to that book all the time, because it just takes all the crap and all the difficult moments of your life and reframes the whole thing to be like, no, this is how it has to be successful. This is how it has to be, and lean into that and fight through that and know that you get better at the end. And so my kind of lowest point through those businesses, we had, a handful of businesses. We had 4 or 5, depending on which snapshot moment you want to look at, because we started selling things off, but had 4 or 5 businesses. They were very successful on their own, but they were very lumpy. The highs were really high. We were killing it. The lows were really low. And I was actually coming out of pocket during those lows, right? The business wasn't even sustaining itself certain months. And so that was due to huge market fluctuations, huge compliance things, all kinds of big changes in this industry. And what ended up happening was all these things culminated into a moment where I was working 100-hour weeks. So my health had slowly deteriorated over years. And I was in my 20s. So I was like, who cares? One day of sleep and I bounce back, and I'm just back at it the next day and can work another 12 to 16-hour day. It didn't even occur to me to think of it any other way, right? So working 100-hour weeks, that caught up to me, and it hit a point where I was going through major health issues. I had a serious concern about a potential life-ending concern at that moment of time. And it was still outstanding. Tests were being run. I was very, very, very concerned. I had a long-term relationship with someone that I thought I was going to marry. We would be together forever and have the full family thing. That was on the rocks. That was absolutely at the worst place it could possibly be. My family and friends, which historically I grew up in a very tight-knit family, very large family, many cousins and close siblings, etc. I was not keeping contact with them at all. So my health had deteriorated. My relationship, the person closest to me, had deteriorated, was completely on the rocks. All close relationships from there had completely left. And basically the only thing I had were these businesses I was pouring myself into, and those were having issues. So I was like, what have I done with all this? Like, what exactly? It was terrible. I was super depressed because my house was terrible and I had no relationships to speak of. I was eating like crap. I was just eating anything I could in the car at any given point, protein shakes, just to have something in my stomach. And I hit a wall, and I was very close with our staff. I'm still super close with our staff. We have a very family mentality. And I just sat down and just said, guys, like, what does this look like? What do you guys think the path to success is here? Because I'm not seeing it as a clear direction with many different things. So we heard the group out. I kind of went back on my own and said, I need to analyze streams of income, right? What I need to know is how much time do I spend and how much time do I make for those efforts, period. I don't want to get too complicated. So what I found was that at a certain point, I realized I was making a lot of money, but I knew that lumps that were coming ahead in this industry. So I took that money and I invested in real estate with partners, and I put it into strategic projects at that time. And then, so if you fast forward to the worst, most terrible point in my entire life, where I was extremely depressed, I had a lot of really big questions of if I wanted to, how I wanted to live, et cetera, and what I was going through. And I analyzed my income. I realized that something like, in my average for that year, something like I think it was about 80% of my income was coming from real estate, because I had shoveled money into real estate. I was pushing all of my savings into real estate consistently. I almost had no savings. It was all income from real estate. And then I looked at the business that had historically generated all the returns, and that was tanking, but it was taking up 90+% of my time. So on one hand, on real estate, it was at least 80% of my income, but let's say 10% or less of my time. And then on the other hand, it was 90% of my time and 99% of my negative emotions, if we're being honest, was going towards this other business entity and all these businesses. And it was causing so much issue, but with very little return respective to how much time it was taking. So when I understood that and I sat down and analyzed it, I just basically was just like, what have I been doing and why have I been doing that? So I went into the team and I just said, look, we all talked this through. I'm wide open with you guys. I'm 100% open and honest. We're selling the business and we're moving on. And so the majority of the team went with the business to the buyers of that business, and they went on to do different things. And then a small team went to the real estate side. And I just analyzed it and said, look, what can I give back? Because real estate, essentially, I looked at it like it saved my life. Because life as I know it today, I have 2 kids, I have a beautiful partner, I have an amazing family and relationships and traveling and these great things. Real estate saved that life and maybe my life in general. So I'll say that I wanted to give back to the community and see what I could offer and what we could do differently than everybody else in the fund space. And that was, we analyzed how we were investing and what we were able to give, which was flexibility. We were able to give a competitive return and huge amounts of flexibility, which is exactly what I wanted at that phase of my entrepreneurial journey, especially to be able to say, look, I got this big opportunity. I could take the money down in 90 days or less and go buy this other thing, et cetera, whatever it was. So we crafted that fund, and we spent about 1.5 years putting that together and curating the acquisition models to make sure that we could give that flexibility to investors. So the darkest moment, actually the best thing out of my entire life came from, or the darkest moment brought the best things in my life today. So I'm really thankful for that. But I could not have imagined anything that life is like today. And I credit real estate for that, truthfully.
So you were taking the profits from your business and putting them into real estate. What types of assets were you investing in on the real estate side during that time?
Sure. So I know you guys are primarily multifamily focused, right? So right. So I did a market analysis, and what I found was that I love multifamily because it has insane benefits. Frankly, over I think if my numbers are correct, it was like the Great Recession, which impacted me greatly. I still very clearly have scars from that in the way we do business because we cannot forget that memory. But I think while the rest of the country was tanking, multifamily was like up 3% or something wild, right? So I have a huge respect for multifamily, but it's a huge respect in the sense that there are better operators than what we knew how to do. So we stayed away from multifamily. Single family, it wasn't scalable for what we needed to do. My partners today are 9-figure, my head lead partners on the JV side are 9-figure guys. If you bring even $1 million house, they're just like, you can't spend the time on it, right? They need big things. So I work with a lot of high net worth guys that are just fantastic, half mentors, half partners, just great, great, great people. So we looked for something else. And what we looked for and what we built a niche for were high return projects that had problems. So what we went after were initially really two different types. One were a fully distressed model. So they either had financial distress, like some kind of foreclosure situation, or they're missing payments or some kind of issue somewhere, or they were in some kind of other distress, whether it's environmental and we just had to cure a water table or whatever it was, very, very kind of things that brought us that direction. So that typically yielded a lot of retail and industrial properties, which we still specialize in industrial, a little less in retail, but today we manage about 85 million, no, a little more than that in industrial. So we're very active in the industrial space. And then the other side of our acquisition model we found this niche at the time. I don't even think this exists today. We haven't seen the opportunities where there was a huge value add play in zoning changes. Now zoning changes have been this robust process in many jurisdictions, cities, counties, whatever, but we found a niche, especially in Southern California and in a handful of Western states. So we would buy properties at strategic times where zoning was about to change from either retail to multifamily. We've done a number of those projects, or any type of lower use value to higher use value. So we did a handful of those, and it was as simple and as complex as fighting with the city, working through with the planning department, and essentially double or tripling the value of the property in a relatively short period of time. So we were looking for a higher value and then a hold. Most people, they flip it after that, right? For us, we just went and refied it. We said, sure, have the bank give us the money back. Then we hold the property and we got the cash. So we used that model pretty extensively and effectively for many years. And we were doing that at the time. I kind of built out more of the teams. I was more on the asset management side, on parts of the acquisition side, because my capital side was covered. I had those very high net worth partners. And we really built a very streamlined, good model and had great returns.
Great. Yeah. So you said something earlier that struck a chord with me. So there's a lot of strong players in the multifamily space, right? And I kind of learned that the hard way. I'm
Sure.
spending hours, days, weeks trying to find deals that pencil out. And, ultimately I ended up having a bad experience with a deal that I thought was good, but that made me realize that, instead of trying to beat these guys, why not try to join them, as the old cliche goes. But, as far as Saint Investment Group goes, what does your business model look like? You mentioned you have an income fund, but for those that may not be familiar with the fund model, how does that look?
Sure. So historically, what I was talking about is our JV model we did in the past. We had these higher net worth partners, et cetera. What we've transitioned to today, because the issue with the JV model that we had for our business was that it actually didn't fill the need for many people who are interested in our network. And it wasn't even what we were just a standard 5, 7 to 10 year fund. We gave a small pref and then we split the back end. That's kind of the standard real estate fund as it's structured today. So we took a different approach and we looked at what income funds are, which is basically a set preferred return. So a set return on investment paid on a monthly basis. We pay out monthly. And we have an initial lockup period of 1 year. After that first year, which is just so we can place the money, we can get a base return so we keep our lights on in the office. And after that, the investor can get their money back anytime, 90 days or sooner. Often it's a lot sooner because we're very liquid as a fund. And so the purpose of that is that we can pay the investors back when they need the money, right? So our preferred return, what we pay out to investors is 8% annualized. we have zero fees. There's no acquisition or disposition fee. There's no management fee of any kind. There's literally zero fees. So what you see is what you get. And what we had found at the time is we were looking to invest in funds, but the fee structure, whatever they quoted as IRR or return on investment or return to investor, it ended up being way lower because that's not what was returned. That's what was the returns before the fees. So we just pay out the 8% with a 1-year lockup period to make sure we can place the money. And anytime after that, we will return the money in 90 days or less. And it's 100% real estate assets, which insulates an investor away from the equities markets or bonds or, owning property themselves, et cetera.
Got it. So Nic, you've had a pretty fascinating journey up to this point. What do you think that you've done differently than others to get to the point you're at today?
Well, yeah, I'd say that the number one thing, I always look back of like, what were like the big points, like the absolute turning points where either getting an idea or getting this new concept down or getting a new investment model, et cetera. And the number one thing for me recently has been pattern recognition, that I've realized that we just were a little ahead of the curve on some pattern recognition for different markets and for some different models. And that allowed us to just be a slight step ahead on certain things. And the other side is doing something unique. So the income fund model is nobody's doing it right now. We're doing it because we buy assets that are more liquid. We can trade in and out of assets more quickly with our model. So our other competitors in the space can't do that. So we offer something just unique. So pattern recognition is like when we look back and see what worked for us, we just maximize the heck out of that, especially on marketing or on acquisitions. And then the other is just trying to be as unique as possible in our approach and finding what worked for others and a few different things, maybe combining that in a unique way and moving forward. So that's almost always is understanding what worked and maximizing that, and then understanding how to maximize that in the future for doing something unique in a different way.
Got it. And so I know you mentioned you came up from in a big family of entrepreneurs, business owners, and you have that good, strong network. So I've realized how important networking is in the investing space, getting around people who are doing what you're doing or doing what you want to be doing. It's a huge piece for the mindset. So what do you do as far as getting around the right people and networking with the right folks?
Oh my gosh, man. That's a huge piece. And that's infinitely important to me at this stage, especially. On one side, it's getting around, on one side, it's getting around people in mastermind type situations or groups. It's like, done together type groups, if you want to think of it from that marketing perspective, where we all have something similar. I mean, you and I are part of groups together, right? So the reason for those groups is that we're all in this together, doing things and comparing notes. Hey, I had this big win. Maybe it could help some other people in the group. And it's funny because most of the time it's competitors, right? But even if it's competitors, it's not competitive, right? It's like, hey, there's a big enough pie where if we all do this together, if you give, someone else is going to give back to you in a different way. So mastermind groups are absolutely essential. Especially if you're in a growth mode and you want to be on cutting edge areas of your business. The other side is I literally build my social circle and my life socially around these types of things. So I don't work out at a normal gym. I actually work out at a gym that in order to get into the gym that I work at, it's like, I don't even know what to call it, a social club, I guess. In order to get part of this social club, I had to have, first off, somebody vouch for me. Okay. And then 3 other people write recommendations saying they knew me. And then it was taken to a board to approve me being added as a member. Okay. And then that's before they asked for a huge check. And then I still pay a huge check every month. I got a private locker. There's, all kinds of crazy stuff for this scenario. It's like a country club, but you don't even get a freaking golf there. Right. That's just to be part of that. But in my network that I see every single morning, I see mayors, massive CEOs of companies, huge real estate developers, investors, funds, the PIMCO guys, one of the biggest, real estate investment. So it's all these incredible network of people that I see. Hey, what's up, man? Hey, what's up? Hey, good morning. How's the kids? How was your weekend? Right? Every single morning. And I go through those hoops to find the most exclusive group, to find the most exclusive groups, to be around the most exclusive people that are doing high net worth things and high quality things, because not only is it about the money, because it is, you want to be around successful people, but it's also about the other things these people do, the philanthropy, learning how to give back appropriately, learning how to be a family individual in the midst of being very successful or having a lot of work needs. So learning from them, and then what I can give back is positivity, an update of how the world is today in the business place. Hey, try this for your marketing. Hey, blah, 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 blah. And it's that give and give back mentality. So I take networking and social circles extremely seriously. I told you an example of the social side. On the business side, other than the mastermind groups, I'm part of all kinds of entrepreneur groups, because those are my people, right? Part of entrepreneur organization. I'm part of International Executive Council. I'm part of IEC, YEC, IEP. I mean, they all sound the same, but they're amazing, high quality groups of people. And then a lot of people in real estate, I do the same.
Yeah, the thing I've noticed that was really interesting over the past couple of years since starting my journey, prior to getting into this space, there is kind of that limited mindset, like, competitors, like you can't share the wealth. But, the more I get into the investment space, real estate investment space specifically, everybody wants to help each other. We can all be successful together. There's that abundance mindset. So it's really fascinating. Another thing I've noticed as I go down this entrepreneurial path is the time management piece is extremely important, and extremely, it's something that I realized was somewhat foreign to me prior to, kind of trying to do my own thing. What are some strategies that you've picked up, or, to keep your time managed and prioritize everything on a daily, weekly, monthly basis?
Oh man, I love this question. I freaking love this question, because it's true. I am more naturally on the build it on the way mentality. So I'm not naturally organized. But when you have you can cheat on 1 to 5 employees, you can be semi-organized. 5 to 10 to 15 employees, you can have somebody help you and you can kind of get it together. When you hit dozens of employees, whatever flaws that you have, it's like a gigantic spotlight magnified times 10,000. You have to figure out if you can hire somebody to remove or fill in the gaps of what your deficiencies are, or if it's something where it's a leadership deficiency that you actually just have to solve in yourself. So for me, organization was a huge building block that I analyzed and said, I can't outsource this. Actually, I need to understand systems in the business, and I need to co-author these systems with our team to help create these, because otherwise I wake up and I don't even recognize the business, because there's systems that I didn't sign off on, that I don't fully understand. And so once those are set, I get out of the way. I don't want to micromanage our amazing team, but I need to be on the cutting edge of creating those. So this is where we're at now, after many trial and error moments throughout this whole, history of doing this. Tasking is, I'm going to kind of bounce around if that's fine with you. Tasking is the number one, and that's like daily, weekly tasking. I don't try and get too cute and do 1 year goals for the team, right? We do talk big picture, but it's more so what are we doing about these big goals? It's much less talked about the big picture of the 12-month goal is really difficult. And if you ever want a really good understanding of how to set goals and how to manage those, a book that nobody seems to know this book, but it's 12-week year. Okay. 12-week year. And the mentality of the book is set annual goals, just accomplish and budget them for 90 days, basically. Don't do them in a year, do them in 90 days. But every week you have an absolute must achievable on those goals. And the other book that's more of a conceptual idea, so that you really understand your highest level opportunity at any given time, is The One Thing by Gary Keller. Those 2 books are, one's a mindset piece, and then the other's an actionable item piece, have been game changing, and we use those constantly. So on a daily basis, we use task management tools to the moon. We use Asana specifically. I personally love Asana. It interfaces really well with International Team. Every single task must have a deadline and a priority and an assigned responsible person, period. There can't be 3 assigned people, because it will they just point fingers at each other. Everybody just blames each other, right? It's one person responsible for it. So That's what we handle for tasking. We have recurring tasking where it's literally one click of the week and the whole thing's set up and the team knows exactly what they're doing. And then there's ongoing tasks. That's the tasking piece and the goal setting and planning piece. As a personal note, I do use 12-week year and I stick to that very heavily because I analyzed it and did it a little bit differently. But what I can achieve every week is the ability to sit down on a Sunday night or a Friday afternoon for the next week and say, these are the tasks I'm getting done each day next week, right? Not that I'm going to 100% be perfect student of myself or perfect employee to myself, but most of the time, yeah. And I can hold myself accountable and I know which days those are due. And then I can grade my weeks. Did I suck this week? Did I actually get ahead so much that I beat the next week? And it's only a few a day. It's like 2 to 3 tasks a day. And then the rest of the day, I can kind of fight fires and do different planning. And I carve out time on a weekly basis to kind of long-term plan and visualize. I play with charts and, all kinds of different marketing funnels and flows and hiring org charts, et cetera. But that's been the biggest thing is understanding true delegation and tasking, right? Which is not micromanagement. That's a failure of delegation. So true delegation and tasking, understand true goal planning, right? Which is not saying 1-year goals, good luck, everybody, talk to you in a year. It's drilling it down to what the weeklies look like. And then managing that by the numbers. The flip side, I'd say, we integrate KPIs, key performance indicators, which are just per department or per goal, exactly what metrics we want to see. So for our YouTube channel, which I highly recommend everybody check out, we have KPIs of like, what's our click-through rate, right? What's our 1-minute interval? What percentage of people are still watching at that 1-minute interval, right? What's our impressions, et cetera, et cetera. We have those for each and every, whether it's YouTube, whether it's leads that come through for our funnel, whether it's investors, how many investors we're able to help on a regular basis. We manage by KPIs very much as well, more on a performance basis.
That's fascinating. I love your philosophy with that stuff. Now, you mentioned you had some kids. So yes. I've got kids as well. I've got a 1, 3, and 5-year-old. I'm always curious to hear, someone like you, your perspective on, lessons you would pass down. You come from an entrepreneurial family. I'm trying to incorporate some of these aspects of what I'm doing into their lifestyle at an early age. What kind of stuff are you doing in that department?
Oh my gosh. Well, first off, you're one kid ahead of us. I'll put it that way. So I come from a huge family. I got, almost 60 cousins. Okay. That's just on one side of the family. Okay. So big, crazy Italian family and very, very big. So we're pretty much expected to have a lot of kids and make sure that keeps going. I have 2 kids now. I have a 3-year-old and I have a 4-month-old as of this recording. So you got 1 kid, you got that 5-year-old ahead of us right now. And we're going to do at least 1 more. Okay. So we'll have the big family. I'm more interested at what you do to manage it with 3 kids, because that's really impressive. But what we plan to do in the future, because we talk about this very much, my lady and I, her family has a similar background. They're actually Italian and Mexican immigrants. So they almost identical generational, everybody came here at the same time kind of thing. So they understand the immigrant work ethic in my family was just like, yeah, you just work. There's not there's no question. There's no debate. There's no does the government help you? It's just you work and you can't trust anybody else to take care of your dinner, right? It's on you. And I really like that immigrant mentality and that hard work mentality, that old world hustle that is missed today. So the 2 things we talked about are this, is that the first is our kids will work really early. I started at 12. I don't know. Maybe that's too early. Maybe, there's probably a lot of comments on that. Worked well for me because what it did was it gave me repetitions of the business world very early on. So if you start work by the time I graduated, I'll put it this way. By the time I graduated college, I had 10 years work experience, right? So by the end, it didn't benefit me in the end as far as my resume, because I just went and did it myself because I was that confident because I had spent that much time in the working world, right? But 10 years work experience where most of my friends maybe had 1 or 2. But I had 10 years of repetitions and 10 years of experience internally. So that by the time I talked about pattern recognition earlier in my life, by the time I graduated, I was like, I actually know how these bosses ran their businesses. I feel like I know I'm 22 and I'm not even supposed to be able to think that I could be compared to these people, but I think I can actually do just as good as they did. And I had that confidence to do that and to kind of step into that when I had to. So that's one, is kids working very early, all of them. We are blessed with 2 boys. With my luck, we'll end up with like 3, 4, 5 boys, and it'll just be chaos and a crazy household. But they'll all be working early, whether they're boys or girls. The second is I forgot the name of this book. I forgot that. You want me? I'll actually pull it up right now if you want me to.
Let's do it. Yeah.
Okay. Let me pull it up right now because it was that. I know we're throwing off your.
No, all good. I'm excited to hear what it is.
It's really good, and I actually, on a personal level, want to offer this to you.
Excellent.
Because it was I saw this couple speak, and I was like freaking blown away. Okay, here we go. Okay, I got it. You ready?
Let's do it.
So the second thing that we're gonna do, I was at this entrepreneurial event, and everybody in the room, in order to be in this room, you had to have a multi 7-figure a year business. Okay, there were hundreds of people in this room. So it was through a group called Entrepreneur Organization, which I'm very involved with. I really love the group, and the topic was how to raising responsible and motivated children in affluent families raising responsible and motivated children in an affluent family while avoiding the entitlement trap. Okay. So basically it's like, how do you, because you work your tail off, John, I know you do, right? So how do you, when you achieve all the success that you want and need and deserve in this world, how do you give that same amount of hustle to your children, but they don't get the weakness or they don't get the softness that comes with having the silver spoon? So how do you do that, right? I heard this couple talk, and their book is called The Entitlement Trap. And it's basically a system that they use from a very wealthy family. And it gave their kids basically a daily to-do list. They had 4 things they had to do every day. One was get ready for their morning routine. One was a chore. One was a learning exercise or practice of some kind. And one was their nightly routine. And they did that from the time of about, I think, 7 all the way to like 18. And then from there, they pay out based on each thing. The kids can invest a certain amount, percentage they invest, a percentage they have for spending income, percentage they give away to a church or a charity or some kind of way to give back, and then another percentage of something else. And basically, if their kids wanted to go, my family, it was, if you want to go to the movies or you want to do something, my dad or mom would just be like, sure, do whatever you want. If you have the money, go ahead. And I'm like, well, I don't have the money because I'm a kid, and they're like, oh, well, you should fix that. You should figure that out. Maybe you need to go make some more money, right? So it's that mentality of giving your kids the gift of self-sufficiency. So we're going to do something similar where there's a system, they can make money and they can go do that. And if they want to go invest more and then realize that they're making more on their money, and then that extra money that they made actually made more, if they can do that, that's the goal, is to teach them self-sufficiency, budgeting by doing the actual repetitions, and then learning investment on a high level early on. That's what we're trying to get to.
Great. Yeah, I couldn't agree more with the aspect of teaching them the importance of merit-based or value-based compensation as opposed to what most of the W-2 employees in the world are experiencing on a daily basis. But Nic, I could talk to you all day, man. Honestly, sure. I'm fired up about what you're talking about, and I'm ready to go take these lessons and deploy them into my own business. But just got time for one more question. So it's the question I ask all of my guests. Quick background, I work at Diablo Canyon Nuclear Power Plant here on the Central Coast of California. Was supposed to shut down in 2025. They recently announced they're shutting down in 2030 now, extending a little bit because of, the California power crisis that we're undergoing. But that doesn't change my plan. I'm still trying to get out by 2025. So what's your one piece of advice you would offer to folks who are looking to pursue a life where they have more freedom and control, entrepreneurship, real estate investing, whatever it may be? What would you offer to those folks?
Absolutely, man. It's the same advice I would offer someone that's in a W-2 as someone who's in an entrepreneurial situation. And it's invest early. For me, it was invest as early as possible and invest as much as possible while keeping your expenses lower, right? So don't if your boss gives you a huge raise or your company does much better, don't absorb that expense. Don't let expenses creep up with your income. Instead, always be pumping money into investments. Real estate's good. Equities in many environments are good. To me, real estate is the number one focus and always will be because it has all those advantages, but it's invest as much as you possibly can and get the long-term benefits. And then when you get that back, reinvest that each time because it multiplies in such an amazing way. I literally had my life saved by real estate and by investing. And I'm so thankful for that. And then at the time that I invested, I could have never seen that perfect storm of bad things come together. But I'm so happy that I did that.
That's so good, man. So Nic, where can people reach you if they want to learn more about you?
Sure. So we have an education platform. We put together weekly videos, multiple long form, amazing videos on real estate. And that is our YouTube channel. Just search for my name, Nic DeAngelo. And then also our website, saintinvestment.com/resources. We have hundreds of blog posts, hundreds of free content, free ebooks, all that. So between the two, it's just a ton of free materials we're giving back to everybody.
Love it. Ladies and gentlemen, Nic DeAngelo, Saint Investment Group. Thank you so much.
Appreciate it, John. Thanks, man.
Thank you for listening to Freedom Investor Radio. If you like what you heard, make sure to rate, review, subscribe, and share with a friend. Thanks again for listening.